Good morning. It is Thursday. It is the Bubba Show. And, as we talked about news already, I did want to talk about today, and I think it's an interesting divergence in some of the things that are happening in the market, is why have the industrial stocks started to fail here a little bit. I think it's something that should be, not putting up the red light and telling you not to trade. Because, again, as I said earlier in the week, we always want to trade. We can't worry about every detail, every news. We are technical traders, not fundamental traders. But what I'm starting to see, and what I want to share here today, is why it's important. Number one, the employment situation in this country is fairly dire as we continue not to hire new employees into the industrial field. The companies like Caterpillar, Deere, Cliffs, Joy Global, they continue to take their work outside of this country and take it out to the poor markets, into China and into Vietnam and everywhere else to get that cheap labor. So truthfully, the industrial workers are not being supplied with jobs. And the problem is there's that sector of people in that 45 to 60 range that were industrial workers that don't have the time, the money, or whatever to get retrained into the computer sector and are not qualified in other jobs. In the meantime, Ben Bernanke is spending $85 billion a month in trying to support this system by keeping down low interest rates when he could be taking that money and be putting these industrial workers back to work in what we call the war effect and rebuilding America by rebuilding the roads, bridges, and levees. And the issue here and the problem here is that the unemployment continues to get worse, and it's starting to take its toll on some of these industrial stocks. But just one more point on the workers. If people are working, what are they going to do? They're going to spend. If they spend, they're going to stimulate the economy. So wouldn't that make more sense to be able to stimulate the economy instead of trying to artificially bail out the banks out of their toxic debt? But when you take a look at stocks, now you look at a market that is now on, all-time highs with the exception of the S&P and with the exception of the NASDAQ. Now, the NASDAQ I don't think will make all-time highs for quite a while because, they're so far away. But, I mean, they're on 14-year highs, so that's pretty good. But the S&P, probably it might have by the time you watch this, might have taken out its all-time high. But what you're starting to see is the industrial stocks have starting to show some weakness. It shows that we're starting to wear down a little bit. You take a look at a stock like Caterpillar, down from its all-time high. It's 20-25% off its high. Deere is still very near close its high. You look at a stock like Joy Global, down 20% from its high. You take a look at a stock like Cliffs, down 60% or 70% from its high. These are warning signs. You can look at all you want, but these are signs. Now, we are not fundamental traders. We are technical traders, but these are signs that can tell you that an end is possibly nearing for this particular cycle. And markets, like anything else, do run in cycles, and I think this is something that you have to look at. And when you're looking into that sector, don't think that all boats don't have to go up with a rising tide. Okay? Each sector is independent. Each stock, each chart is independent of itself. So just remember, you're starting to get some divergence here, and this is not a call out to say the market's going down or we're going way down. We do need, for the health and the wealth of the market, a little bit of a correction because we need some volatility, which creates more activity in the market. But remember, keep an eye on those industrials. It's a sign of weakness, and it looks like they continue to work their way lower. So remember, if you'd like to check out the AJO call, todd@adamesh.com or todd@averagejoeoptions.com. For Thursday, the Bubba Show. Have a great day. We'll talk to you on Commodity Corner Friday.